Yeah, welcome to the chat. So right here on the weekly market outlook, we need to know that there are basically two kinds of analysis employed in the market. No type of analysis is perfect, as each analysis is nothing but the perspective of the operator analyzing the chart. So for the sake of clarity, we need to be aware that right here we employ the liquidity concept, otherwise known as the market mechanics, which is also an advanced support and resistance kind of strategy. And we need to know that there are two kinds of strategies, which is the trend following strategies and the counter trend strategies. So this strategy is basically a counter trend strategy. Therefore, we are going to be looking out for liquidity zones, which are support and resistance zones, to have a feel and an idea of how price is probably going to react at these zones, so we can have an outlook of the market for the week. So what are liquidity and trap zones? Liquidity zones, these are zones that offer the best opportunities in price, the best opportunities to buy or sell. They offer the highest risk to reward per trade, and they offer the lowest risk per trade. And these are what every trader should be looking out for, because this is the roadmap to profitability. So we have the daily highs and lows, swing highs and lows, weekly highs and lows, monthly highs and lows, quarterly highs and lows, yearly highs and lows. Those are the liquidity zones. So right here we have the weekly high and low, we have the weekly high and the weekly low, which is right here in front of the chart. And we need to know, in the market outlook, we only look out for zones that have the strongest probabilities, so we are going to be ignoring some zones. So right here in the low of USD JPY, we can see that the candle that closed at the low is a bullish candle, and this invalidates the setup, because the candle that we want to close at the bottom of the week, if it's at the low, we want a sell candle, and at the top, the candle that we want to close is a buy candle, because if you have a sell candle at the bottom, then this signifies that sellers are strong and present at the lowest point in the chart. Likewise, if you have a bullish candle at the top, it signifies that buyers are strong and active at the bottom of the chart, at the top of the chart. So which significance does this hold for us? The significance of this is the fact that it confirms a downtrend in this zone if we add a sell candle. Likewise, if you have a buy candle, it confirms that the trend is strongly up. So those are the zones we want. So since we have a bullish candle at this zone, we are going to be ignoring this zone. However, having a bullish candle at the top here makes this zone a beautiful spot to look out for. So what do we expect? By the market opens, we expect the market to consolidate. And when the market consolidates, what do we expect next? We expect price to rally up, take out this high, and for price to form a stronger resistance in this high. So we expect price to introduce new sellers if all rules are met, and a candlestick formation that meets all rules are formed. Mind you, if price breaks this high with more than the close of two candles, it means that price has broken it impulsively and we make no conclusion on this pair. However, if reverse is the case, we have a fair value gap in this zone, so we can expect price to retest this zone before price rallies further up. Likewise, if price comes down to the zone, we can expect this low to be broken and for price to do whatever it wishes to do. On AUD JPY, at the bottom we have a beautiful sell candle here, which is a zone we can look out for, and at the top we have a bullish candle here. So we expect price, since price consolidates around the high, we expect price to accumulate, take out this high, and give a pattern for a stronger resistance to be formed and for price to rally further down. However, if this high is broken with more than two candles, then we can expect price to rally further up or do whatever it wants. If reverse is the case and price rallies down, we can expect price to retest this fair value gap price here, as we have a lot of money sitting down here, and this zone. And if price impulsively comes down during the week, we can expect this low to be broken and for price to form a stronger support to the upside. On USD CHF, we have the buyers here, so I will ignore this. You can do this analysis on your own. On Euro USD, yeah, at the top here, in this particular swing high, we have a beautiful bullish candle here, and in this swing low, we have a bearish candle here, which are very beautiful setups to look out for. So once market opens, we expect price to consolidate, price to take out this low to form a stronger support for the euro to strengthen against the US dollar if all rules are met. However, if price breaks this low with more than 2 candles closing below, then we can expect price to do whatever it wants. However, if reverse is the case and price rallies up to break this high, we can expect a stronger resistance to be formed if all rules are met. However, if price breaks this high with the close of more than 2 candles, we can expect price to do whatever it wants. On AUD USD, at this low, we have a bullish candle, so we are going to ignore. However, at the top here, we have a bullish candle, which makes it a beautiful zone to look out for. So by the market open, we can expect price to consolidate, take out this high in a liquidity manner. That means not more than 2 candles closing above this range, and if price does that and a pattern is formed creating a stronger resistance, then we can expect a sell for price to push further down for a weaker Aussie against the US dollar. However, if reverse is the case, we can expect price to rally down to retest this fair value gap or break this low or do whatever it wants. So in trading, just as much as it is important to know what to do, it is also important to know what not to do. At this zone, we don't have a bullish candle at the top, as we have a bullish candle here and a bearish candle here creating double top, so we are going to ignore that zone. And at this zone, we have a bearish candle, which is this bearish candle at the bottom, so we can expect price to consolidate. Once price consolidates, we can expect this low to be taken out for a pattern to form for a reverse for the Great Britain pound to value against the US dollar. However, if reverse is the case and that does not play out, we can expect price to come and retest this fair value gap or these zones or break this high and do whatever it wants to do. On NZD USD, at the top here, we can see a bearish candle, a sell candle, so we are going to ignore this zone. And at this zone here, we can see a sell candle, which is a beautiful zone to look out for. So once price opens, we can expect price to accumulate, manipulate to the downside, take out this low and form a stronger support for a buy for the New Zealand dollar to rally further up. However, if reverse is the case, we can expect price to break this high and do whatever it wants. Mind you, if price breaks this low with the close of more than 2 candles, then we can expect price to do whatever it wants. On USD card, at this bottom, we can see a bullish candle, which is a beautiful zone to look out for, and at this low, we can see a bearish candle, which is also a beautiful zone. So by the market open, we can expect price to consolidate, take out this low and form a new support. However, if reverse is the case, we can expect price to come up, break this zone, then form a new and stronger resistance. Mind you, if reverse is the case and price breaks this high with the close of more than 2 candles or breaks this low with the close of more than 2 candles, then we can expect price to do whatever it wants to do. Just as we predicted last week, even though this is not a beautiful zone, we expected price to break this zone and reverse, which it did. On Euro JPY, we can see this is a beautiful zone to look out for, as we have a sell candle closing below and a buy candle closing above. So we can expect price to consolidate, take out this high in a liquidity manner, and not more than 2 candles closing above. Then we can expect a stronger resistance to be formed. Mind you, if price takes you to the close of more than 2 candles, we can expect price to do whatever it wants. However, if reverse is the case, we can expect price to fill this fair value gap. This fair value gap, as we have lots of money sitting down here, because these zones we have minimal trading in between, and we have price just rallying up. So we can expect price to come and create an equilibrium in these zones, in this fair value gap. On gold, we can see beautiful zones. At the top you can see a bullish candle, and at the bottom you can see a bearish candle, which are nice zones to look out for. So we can expect price to consolidate, take out this low, and form a stronger support for gold to rally up. However, if reverse is the case, we can expect gold to rally up, take out this strong resistance, and create a stronger resistance. So those are the case scenarios on gold. GG for your progress. If you have been watching this before, do this analysis on your own. On silver, since price is close to this support and we have a bullish candle here, we are going to ignore this. However, we can expect price to rally up, and this zone as well is not a good zone, so we are going to ignore silver as it is not giving a very clear and strong direction. Here's this CNH. This is not a okay. On SNH we have a bearish candle at the bottom, so by the market open we can expect this low to be taken out for price to give a reversal pattern for a buy further up to retest this fair value gap, for price to fill this fair value gap and take out liquidity, and we'll have liquidity at these zones as well. BTC USD at the price up, you can see market is already rallying, so we can expect market to grab liquidity right here. We can expect price to grab liquidity, and if price grab liquidity, we can expect a reversal to the downside. You can see right here on BTC USD, price is trying to fill out this fair value gap as we have lots of money sitting down here. Fair value gap, these are zones where price opens and closes with minimal to no trading in between. So these are the zones here. So price, you can expect price to fill them and get a push up. However, if price rallies down and take out this low of, okay, there's a bullish candle here, so you cannot expect much of a strong reversal here. However, price is rallying towards this liquidity zone. On DXY, you can see that at the top a bullish candle closes, and the low there's a bearish candle. So by the market open, we can expect market to take out this resistance for price to form a stronger resistance to the downside. However, if reverse is the case, we can expect price to rally down to take out this low and form a stronger support. Mind you, price forming a stronger support or a stronger resistance, it must break it in a liquidity manner, not more than the close of 2 candles below or the close of 2 candles above. Plan your trade your plan, and most importantly manage your risk and emotions. Wish you a peaceful week ahead.